Hello everyone, I hope you're doing well. I thought I'd do a trade recap on a trade I took a couple of days ago on the S&P 500, and it's interesting to see that the model I'm using currently is everywhere, and it's becoming more and more prominent to me after doing some research and learning about it. And I wanted to show you guys how clear it was, this trade that I took, if you are looking for the right things and if you are using time along with price to take a trade. Now, as you can see on the chart in front of me, I have a 1 hour fair value gap marked out, which is this black bar here. Now, as you can see from the various different points in the gap, that price has reacted to this gap in different ways. So this is obviously a prominent area that price likes to react to, hence why I've marked it out. You can't just mark out every single fair value gap, for example this one, because there's not enough data in it just yet to use that again as a confluence. But with this gap here, we can see price has reacted here, it's reacted here, it's reacted here. We've broken through here, so now this becomes an inverse of what it once was, which here you can see it's a bullish fair value gap. We've broken through this, so we can now use it as a structure to form sell orders from. Now, going into the trade then, the overall price action is clearly bearish. We are clearly in a downtrend. We're clearly in a sell program. We're creating lower highs and lower lows. So that's pretty self-explanatory. So this is why I'm looking for sells. Now, if we go on the daily chart, we had below a previous day low, which was down here. And I'm not sure if this one, let me just check. Yeah, so actually this one was below my target as well. So there's two previous day lows that I targeted, but not also that. I'll show you as well where I was targeting. So on the 15-minute time frame then, going into the day, as you can see, we have Asia range, we have London range, we have New York open range, and then coming into the New York manipulation range, which is actually market open. This is where I take the trade. So yeah, so price comes down throughout the day. We're creating a downtrend throughout the day. And as I said before, this gap here is where I want price to reverse from. So if we just look at the market structure, we're creating downs, then we go up to retrace to grab more liquidity, and we go down. Up to retrace to grab more liquidity, down. Vice and etc, etc. So that's exactly the model that I want to catch. That is the move that I want to catch and trade. So price then enters my reversal point. So I call this the point of interest. Let me just skip back to about here. So it enters my point of interest. This is the key now. This is my point of interest. So we call that point A. And then point B is my target. So I target the original consolidation, because essentially this is a market maker sell model, you can see here. So we have the original consolidation down here. We have the buy side of the curve, which is here. And then as long as we get a smart money reversal here, I can then trade the sell side of the curve down to the original consolidation. So the original consolidation is down here, which also lines up with the previous day low. So what do I want to see when we enter this area? The absolute most important thing is an SMT. So if we drag up the NASDAQ, unfortunately I can't replay back, so let me just find it on here. It's somewhere around here if we zoom in. My Wi-Fi is terrible at the minute, so it's taking a while to load things, which is alright. So if we find the accumulation range just here. So what can we see? So we've taken the morning. We've taken the morning session. We've taken London afternoon session. But what do we fail to do? We fail to take the London accumulation session. So that for me is an SMT. So if we go over here, mark this out as an SMT. So that's great. That's exactly what I need to take a trade right now. So the next stage of my trade is to find a change in the state of delivery. So that is when price changes from a buy program to a sell program. So what do I want to see? I want to see price show me that it wants to go lower. So we're inside of the point of interest. We have an SMT. Now what I want to see is a smart money reversal. So I want to see the change in the state of delivery. So this candle here is where we create the last high. So if we skip price forward, we create the high here, and this is the series of up close candles that creates that high. So once we close below here, which we have already, I'm fine to enter. So this is the candle I entered off of, and I put my stop loss just above the most recent high, because this is a protected high. I cannot imagine price coming above this high, because we have an SMT, we are in a point of interest, and now we have closed below the recent high. So this is where I'd enter. I would then target the original consolidation, which I did, which is down here. But also, as I said before, we have this previous day low, which is this red candle here, this red line here. So if I bring this in, let me just create a new horizontal line just to make it easier. So as well as the original consolidation, we also have this previous day low. So that's two key targets there. So what do we want to see then? We want to see price enter the point of interest, or A. We then want to target the B, which is the original consolidation, just down here. So we want to go from A to B. And what do we want to make sure we're looking at? So as price is playing through, we want to make sure that price is disrespecting these value gaps here, these fair value gaps here, because otherwise we could look for just a reversal, or price could come back and stop us out. So let's play price through. So as you can see, we've already completely melted below these fair value gaps. So this is when it's safe to move your stop loss. So let's just put in a red line here. So if my stop loss was here, what I would then do, if we create or break through these areas, I don't mind moving my stop loss to here. Now even better, if we create an SMT at a high as we're trading down, that is even better, because that is again a protected level. So if we zoom into the 1 minute on here, bear with me. So where are we? So we did not create an SMT just yet. We created a mini SMT at the highs here, which is also another great confluence. So yeah, so price basically just melts through, and this is a great sign for me. This is a great sign that we are going lower, and we are definitely going to hit this original consolidation. So let me just put my trade back in. So we entered off this candle here. Target was above here. Sorry. Stop loss above here, and target was the original consolidation down here. Let me just hide all my thingies. And then yeah, so we're already pretty much 85% there. We had a little bit of consolidation here. This is when I moved my stop. My stop then moved down to here just to protect my profits, and a couple more candles, we hit take profit. And what do we see when we hit that original consolidation? We reverse back up. Now if this isn't clear to you guys, and if this isn't just showing you guys that it does happen everywhere, it's super, if you all know exactly what you're looking for, it's super clear. We've gone from A to B. We have the smart money reversal in the point of interest that I showed you earlier. Prices again reacted to this level, which is super clear, super obvious, and we've grabbed liquidity at point B, and we've continued upwards. So I hope that helps. That was a mini trade recap. Like I said in my video before, this was taken on paper account because I'm away at the minute and I'm just practicing, just making sure I am super confident with my entries. But yeah, any questions, let me know. Any thoughts, let me know. Please like, please comment, please subscribe, and I'll see you in the next one. Peace.